What's going on, YouTube? Jordan Trades back again with another video. In this video, I'm going to be going over how to determine bias using ICT concepts with bullish and bearish signatures, right? So I've been trading for about going on 5 years with ICT concepts. And just recently, like about a year or two ago, I found a system that works the best for me, utilizing all of ICT concepts. Not all, but the main ones that ICT refers to: fair value gaps, order blocks, um, sell side liquidity, buy side liquidity, imbalances, liquidity pools, etc. Things like that is what I use currently that have me going on, pulling and extracting, beating challenges, things like that. So bullish and bearish signatures using ICT concepts, pretty much they're characteristics of the market. So when price is in an uptrend, what does that look like? When price is in a downtrend, what does that look like? So always ask yourself, if we are truly bullish, price should do this. If we are truly bearish, price should do this, right? So the bullish signatures in price are speed to buy side liquidity. So those expansion runs towards buy side liquidity is a bullish signature. Lack of speed to sell side liquidity is also a bullish signature, showing there's no real strength or no real drive to take out sell side liquidity. BISCs being left open, so buy side imbalances, bullish fair value gaps being left open, and bullish, BISCs being supported. So bullish fair value gaps being traded back down into and supported to continue price to buy side liquidity, right? So in that aspect, SIBIs, sell side imbalances, should be filled as we are trading up towards buy side liquidity, right? So we should see the bearish PDAs being disrespected when we are bullish, but bullish PDAs being respected, right? So bullish order blocks being respected, old areas of selling should equal new areas of buying, right? And I'll show you what that looks like. And runs on sell side liquidity with speed towards buy side liquidity. So pretty much turtle soups, right? So when we see a run on sell side liquidity and that quick expansion higher, that shows that we just swept liquidity sell side and we're most likely aiming towards buy side liquidity. Now, all of that is taken over to bearish signatures here. So it's the same thing: speed to sell side liquidity, lack of speed to buy side, SIBIs being left open, SIBIs being supported, BISCs being filled, bearish order blocks being respected, old areas of buying equals new areas of selling. I'll show you what that looks like. And then runs on sell side liquidity, runs on buy side liquidity towards sell side. Let me go ahead and fix that real quick. So I'll go ahead and show you guys exactly, like in the charts, what that looks like. And before I even move any further, I definitely want to give a huge shout out to my boy Quan. I'll link his Telegram in the description. Pretty much he showed me exactly what bullish and bear signatures were and how to implement them in the chart. So I got to give huge shout out and respect to Quan. Definitely tap into his Telegram. He gives a bunch of free game, bunch of free value, and you can definitely tap in with him there. I'll also put in my Telegram chat. So if you guys want to tap in, it's pretty much a community just for everybody, all walks of life, all fucking strategies, whatever you want to do. If you trade trend lines, pull up, you might get some game, especially psychological. So because trading is, the same in the aspect of we're all trading the same markets, we just have different perspectives on it. So moving further, here is an example of bullish signatures and bearish signatures, right? So here in bullish signatures, we should see speed to buy side liquidity, right? So this expansion here, we see speed towards the buy side liquidity here. We see a lack of speed here and then continue expanding, right? So we have sell side liquidity below this low here, delineated with that red line. We also have this fair value gap here, and we also have this order block. So if we are truly bullish, what should price do? Price should raid the sell side liquidity, tap into the fair value gap and the order block, and react strongly away towards buy side liquidity. Now, when I was saying I was going to show you guys what old areas of selling and new areas of buying looks like, that's this right here. So this order block, this is, if we looked at price from this standpoint back, this was looked at as a bearish order block at one point in time. Once we traded up and through that and disrespected it, we can draw this out in time, this old area of selling. We traded through it and closed above it, and now we tap back down into it. It should create a new area of buying if we are truly bullish, right? So that's what I was referring to in that point. We also have this fair value gap here that gets supported. We don't see any speed to the downside, no speed to sell side. We continue expanding. We see a run below sell side liquidity, and we see expansion higher. We have this fair value gap, this BISI being left open, showing bullish tendencies, bullish signatures. Now, here we get a run on buy side liquidity, and we don't have any speed to the buy side anymore, right? We also have this fair value gap here. This was the last fair value gap created after we ran that buy side liquidity. So if we are truly bullish, this fair value gap should be supported. But what does it do? It doesn't get supported, and we trade through it, shifting structure. Now we don't see any speed to the buy side. Here, we don't see any speed. And then we short. We trade short all this in this leg here. So now we come below this low. We don't see any speed to the buy side after taking out this low. And then you see this fair value gap over here. If we drag this fair value gap out in time, we get a reaction right here, right? Boom, look at that. Now, another signature that I didn't add in on the signatures list was one that I kind of figured out over time coming from experience. Old fair value gaps that were once looked at as support, if we trade through that, we can look at it as resistance, kind of like the old area of selling equals a new area of buying. Well, this old area of expansion, if we were truly bullish, we should have came down into this and formed a low and supported price higher, but we don't. We close straight through it, show no speed to the upside, to the buy side. We come into that range and we short. Interesting. So for sell side, right, for bearishness, we have no speed to the buy side. We see extreme speed to the sell side. We see SIBIs left open, SIBIs being respected. Again, no speed to the buy side. This respects it, trades lower. We have another SIBI created, SIBI respected, trades lower. Order block created, trades lower. So this is all showing bearishness, right? And now you can see price flips, we trade higher. And again, like this can all be seen in like, honestly, this is all can be seen on each time frame. Personally, I like to keep it on the higher time frame so that I have a clear understanding of what the higher time frame is doing. If you drop it down to like a 1 minute chart, there's a bunch of different like fake outs because price is delineated from the higher time frame. So having that higher time frame understanding with the bullish and bearish signatures will definitely aid you in entering at key points of interest, right? So here we have a run on sell side liquidity, and then what? We see speed to buy side. We run this sell side liquidity here, and we see speed to buy side doing what? Shifting structure here, right? So now you have to ask yourself, all right, we just shifted structure here. If we are truly bullish, what should happen? Now let's look closer. Remember, I just added in that new signature. If this fair value gap was truly bearish, we should have resisted price here. But what happens? We trade through it. We come down, tap into it, and we trade higher towards what? Buy side liquidity. This high, this high, this high, and the imbalances. Now, ICT would call this a balanced price range. I'm not too fond on the clear definition of a balanced price range. I'm pretty sure like this is it. But terms don't really mean much in the sense that everything is the same, just people use different terminologies for it. So I look at this as like an old imbalance that should have been resisted, doesn't. We trade through it. So now this can be looked at as support. And again, if you don't even want to go that deep into it, there's a fair value gap right here. So either one worked. It's just depending on how you see it, how do you like to see it. That makes all the difference. So you could have just taken a buy here because the fair value gap formed. And again, this is ICT's 2022 mentorship, but on a higher time frame, right? We have a run on sell side liquidity. We shift structure higher, come down into where the fair value gap was created prior to the shift. And you take the entry there, you trade higher towards the buy side liquidity, all points and levels there. Price comes up into imbalance and resist, showing true bearishness. Now we have SIBIs being left open, SIBIs being formed, SIBIs being resisted, no real speed to the buy side, and we go on and on and on. And all of this, you can literally, this is the 4-hour chart. You can put this on a daily chart. You can put this on a weekly chart, depending on what type of trader you are. The hourly, definitely. And you can really just, attack the market and really know and have a clear understanding of where it's going to go because of its signatures and its characteristics, right? So it's really reading and understanding what the market is doing, right? So like here, we have this range here. We have from high to low. We come up, we make a lower high, we trade down towards sell side liquidity, we sweep sell side, and we show speed higher, right? We show expansion higher to get back above buy side liquidity, right? Because if we were truly bullish, I mean, if we were truly bearish, right, in this leg here and taking out the sell side liquidity here, if we were truly bearish, we should have came up into this bearish order block and resisted price lower. No, we should have. If price truly wanted to be bearish, like using like extreme simple like structure and terms, if we were truly bearish, price should have respected this bearish order block and trade lower. We don't see that, right? We don't see a high formed inside of here at all. So what does price do? Price comes down. Note these last two down candles that took out Southside liquidity, and we trade back above that, right? Again, 2022 mentorship. Southside liquidity taken, expansion higher, that takes out buy side liquidity. We come and tap down into the order block. At this order block, we form a low and we expand higher. We create a fair value gap, a VISI, we trade higher. Also at this area of an order block, a propulsion candle, propulsion block, and we trade higher towards what? Buy side liquidity. Again, expansion, we show speed to the buy side liquidity, no speed to sell side, no speed to sell side liquidity to come down and fully fill in this fair value gap. We don't see that. We have this old high that can now be looked at as a support because we just traded through it. Right now we're on the bullish move, right? So old areas of selling can result in new areas of buying to get up into buy side liquidity. That's why that happened. So now we can look at this and say, okay, we just took out buy side liquidity. Do we see any type of speed after taking out the buy side liquidity to sell side? So after we take out the buy side liquidity, where's the low? Right here. Do we see any speed to take this low out? No. So that means that we're most likely just ranging as of right now, and we're most likely going to take out a low, and we would need to see if we would truly want to be bullish, right? So after the sweep on this sell side liquidity, a low is formed, and then we take out this trend line right here, that trend line of liquidity. So sell side liquidity swept, we form a low. This would have been a nice PM session trade to get in line with the market and continue higher for buy side liquidity, and so on and so forth. So imagine taking a trade at this low here, following bullish and bearish signatures and getting out all the way up here, right? So, and let's continue it along, right? So we have this low here that takes out sell side liquidity. We shift structure here, and now we have a high. After we printed this high, does price look like it wants to trade lower? As it's trading, Does it want to trade towards sell side liquidity? No. You could say it's range bound. You don't really know what it wants to do, but does it want to come down with speed to this low? No, not at all. So now we have these. We have these relative equal lows here. It takes out sell side liquidity here. And we would just wait. After we see the sweep on sell side liquidity, you can wait and say, okay, now that we're at a key point in price, I want to see what's going to happen. I want to see what price is going to do. Is price going to trade lower towards this sell side liquidity, or is price going to show speed to buy side liquidity, right? And ultimately this high up here. So what does it do? It does that. Now we see our signatures being printed. Also, another signature that I didn't put on the list is once after a sweep on sell side liquidity, if we form a higher low, that's bullishness. Because if we swept liquidity and we traded lower, in a perfect world, if we were truly bearish, price would continue taking out sell side liquidity. But after we swept sell side liquidity and price is failing to take out sell side liquidity, that's a sign that price is most likely to trade bullish and trade to higher prices, right? So after we see the higher low form here, you can take a trade or hop in or wait for the next session, right? With this being NASDAQ, and wait for the open for the next day and take that trade higher towards buy side liquidity here. So now we have the fair value gap created, the BISI created here. So now you would say, okay, I'm bullish. I want to be bullish in price. You took out sell side liquidity. I want to be bullish. So now you would just say, okay, if I'm bullish, price should respect this fair value gap, right? Price comes up, we take out buy side liquidity back here, show some speed down to the sell side, no speed to the buy side, come up into this bearish order block, trade lower. We respect this bearish fair value gap, we continue trading lower, right? So in this case, this is a complex pullback where this retracement leg shows bearishness, but on a higher time frame, if you're zooming out and looking at it from a wider lens, the true low is back here. So the range is from this low to this high, right? So as we come down into this fair value gap, keeping it in mind, we take out this sell side liquidity below this low. We show speed higher and away. We should have respected this bearish order block here. But what happens? This old area of selling results in what? A new area of buying. And that's where you could enter, take it to the relative equal highs here, above these highs, get higher. Or if you're a swing trader and this is the time frame that you like to trade, then you could hold it for 14,400, right? So that is bullish and bearish signatures, right? So I'll just go back up to where I had the signatures at. So just so that you guys can either take notes, screenshot it, do what you need to do. But speed, lack of speed to sell side, these are all the bullish signatures. So also you can add in old BISIs can be looked at as resistance in bearish signatures. So if we're truly bearish and we fully fill in a BISI, we can draw that BISI out in time and we could look at that as a resistance level. Same way with bullishness. If we're truly bullish, the SIBI should be filled and we can draw this out in time and use that as support. I know it's a lot, but definitely let me know, comment down below if you do have questions on it. In that Telegram chat, if you do have any questions, definitely let me know. I'll be more than happy to create a video and clear it up for you. But yeah, other than that, definitely like, comment, subscribe, comment down below any other videos, any other concepts you want me to go over, and I'll definitely put them in consideration. So definitely tap in and stay tuned for the next video. Peace.